one of those will be gold. So that's another positive that I think gold has going for it. Jay, not only did the public, but the average advisor, and this was the thing when we talked a year or so ago about why I was so bearish, they hadn't been in the business that long. They were used to this one way, give me the Kool-Aid from the Fed and you make money. Now I think they're going to be open to other avenues, CPI number, and that'll have a short-term impact. If there's a surprise weaker, I think it can move gold further. If there's unfortunately a surprise to the upside, it could be the reason to take profits here. The wealth, China, there's a battle on both militarily and economically. I see. And I can't call which way it's going to go, but I think we're moving to more of a confrontational than an easing of a friendship type of thing. But people do, cultural-wise, look at gold. And I think gold, you have to take into the bigger picture now. I think minerals in general, you're young enough and the show's going to be going well for a lot of years. Minerals in general now are the next big thing. Because if we're going to have all these things, every day there's a talk about more electrical cars. Today they talked in America about we're going to stop having gas stoves because it's bad for the climate. And so everything's electricity. And I always like to joke is, well, you better change the infrastructure that carries electricity because part of it was put up by Thomas Edison. I mean, we know there's already shortages and blackouts. How are we going to provide all these things? But all these things that are going to need electricity, the cars and other consumer gadgets and all, they need these minerals. And these minerals aren't readily available. And there hasn't been a lot of years where a lot of money has been spent. And one other thing, which probably be discussed at your conferences, years ago, you could spin a globe, put your finger on it and say, yeah, we can go mining there. Now, where you mine or you want to explore, could be big problems. Look what's happened in South America. Look what happened in Panama with deciding to charge almost 20% royalty on a project which spent $10 billion building. I think if I'm a major and all, I'm going to think twice where I'm going to go. And I think that's going to move back to North America becoming more of an attraction again for the exploration and development of minerals. Yeah, and they have spoken about it openly. About a year or so ago, there was a big BRIC meeting, and they talked about it, about they are literally eyeing a gold-backed, commodity-backed currency. So I think it's only a question of when, not if. And like I said, then I think Pandora's box opens because other people are going to, and it goes back to what we started the interview about is what was moving gold. Why did these central banks decide to become, or at least one or two of them, major buyers? And it's obviously, it's going to be used in some sort of monetary base, not just to look good in the vault or, for anything, for consumer use. But I think one of the things that made it different this time is the fundamental of the central banks being such big buyers of gold. Now, I believe you and I talked in the past and they talked about the BRICS coming out eventually with their own currency, and someday, somewhere, there'll be gold backing some sort of currency because that's the only way we're ever going to get out of these debt crises that are around the world. But I think the fundamentals now are more supportive. And I think a real important, I don't know if people have discussed this with you yet, but it's certainly been my feeling is, as we shifted to physical trading away from London and New York, the CRIMEX, you call it the COMEX, I've always called it the CRIMEX, and it's gone to the Far East, the abilities for the bears, or what we like to call the raiders, that 11 a.m. special East Coast time, just as London would shut, suddenly markets would fall, or there'd be just these crazy paper offers. The change in the paper market versus the physical market is becoming more in line now. For a lot of years, people that sold bullion would say to themselves, I don't understand this. Gold's down $30 and everybody's ringing my phone wanting to buy gold. And so I think a change in the physical market versus the paper market has been beneficial. But the number one factor is the large purchase of gold. They're not speculating or looking to trade it. There's a reason they've acquired it. It may be just one or two, maybe just China, whatever, but it was a bull enough reason. And I think the other important thing is last year was a tough year, but it really finished unchanged. And it was kind of like a boxer that was knocked all around the ring. And suddenly it's the 11th round and they're still swinging. And I think that's how gold got through the year and really now has strength enough, both technically and fundamentally, to make new highs. The raids that used to, go would fall $20 or $30 one day, and it would stay down for weeks, if not months. Now, at best, it's hours or a few days. So I think one of the things is the strong fundamental demand has changed the way the bears, people call it cartels, whatever is out there, if it's organized or not. We do know one thing. Many years ago at the conferences, there used to be a person or two that would tell us crazy people that said there was any manipulation. But the criminal charges and guilty pleas clearly proved that there was. And I think that also has stymied a lot of people that might have otherwise played the negative side. So I think things that used to be a bother or hold back the market had dissipated or disappeared. In the US, the financial service industry still treats gold as kryptonite. Well, don't touch that thing. That's like going to kill stocks or bonds. We make our living stocks and bonds. So in order to get to this, and I don't mean nominal new high, because to get to a new high, you have to take into account inflation since the last high, but a real new high, we're going to need to see an expanding participation outside of the group that normally is involved in it. And and that will coincide with a stock market now that is not viewed by the investing public as a one-way street. The second one was actually tried by Trump. People forget before the pandemic, and he has the pandemic as an excuse, but he did a lot of tax cutting on the basis that it would cause GDP to rise much more and in a sense take in more taxes. And then the pandemic came and that just added to the debt load. One of those things, has to happen. It can't be sustainable like this too much longer. And one of the issues, is going to be and that's why I think the long predicted the end of the US dollar as a reserve currency. I don't know how many years people predicted that, but we are seeing the dollar being used less and less in the world as a reserve currency. And if and when, even if it's on a limited basis, some of the BRIC nations decide to create a currency backed by commodities and gold or a combination, will then open Pandora's box for others to look to that. And without the US dollar as the reserve currency, then the United States crisis is 10 times worse. They get away with a lot of stuff because they're the reserve currency.